Greetings, everyone, and welcome back to our Forex Mentorship Program for Beginners. Today, we are going to be looking at the types of charts. What is a chart? A chart is simply a visual representation of a currency pair's price over a set period of time. We often look at charts like calendars or receipts because they present to us a certain activity or information about activities that has occurred over a set period of time. It could be transactions, it could be anything, geopolitical information, macroeconomic information, and everything. All of those informations are represented in the form of charts, and every time we go into the market and look at our trading tools like MT4, MT5, or TradingView, we see charts in front of us, and whatever it is that we see in front of us is simply a representation of a lot and a lot of information put in place over a set period of time. Now, there are many types of charts that we use in the market, but we only focus on three. Before we go there, let us look at something. When you look at the chart on the y-axis, which is the vertical axis, we always have price represented on the left. Okay, this y-axis, you always have price represented here. And when you look at the x-axis right down, there's always time. We have time and we have date right down here. Time and date is always represented down here, which is the x-axis, and then price is represented over here, which is the y-axis. Let us look at the types of charts that we have. We have too many types of charts, like I said before, but we use three, which are the line chart, the bar chart, and the candlestick chart. What are the line chart? A line chart simply connects points like closing price from one closing price to the next closing price. That's simply a line chart. Line charts are not very good for analyzing the market, but they can help you to understand the general direction of the market, like the general trend of the market. Let us look at the second category. You can have line charts like this. The second category are bar charts. Bar charts are a little bit complicated. We can also call bar chart the open, the high, the close, and the low. When you look at a bar chart, you have something like this. You have the open price here, we have the low of the day, we have the high of the day, and we have a close here. If the price bought that day, the open price is going to be below. We are going to have the high, and we are going to have the close above the open price. This is how bar charts are represented. We are going to look at that when we go into the chart. For the candlesticks, these are the most used type of charts, especially for those who are coming into technical analysis. Even those who are doing sentimental analysis and fundamental analysis, they always look at the charts because it's so easy to understand, especially for the newbies. They contain candlesticks, and this is how we interpret them. Those candlesticks have bodies, they have highs, they have lows, and they have the open. For example, if you are looking at a candle like this candle has a body, okay? It has a low called the lower shadow, which is this week. It has a high called the upper shadow this week. It has a high of the day. It has a close. It has a open. Now, if we have a buy day, the open price is going to be down here, and the closing price is going to be above the open price, because price is going to open down here, trade below, trade up, form the high, which is the upper shadow, and then close above the open price. And all of this is the body. The size of this body is going to tell you the pressure that was in the market. If the buyers were so strong in the market, you are going to see the size of this candle very big. On the other hand, if we have a sell day, the open is going to be over here and the close is going to be below here, which means the market is going to open above, it's going to trade high, form a high called the upper shadow, and then trade below, form the lower shadow, trade up, and then close below the opening price. So for a buy day, price has to close above the opening price, but for a sell day, price has to close below the opening price. And the size of this body is going to tell us the magnitude or the strength the sellers exercised in the market. Now, these candles often have different colors. You can use different colors, but most traders prefer the green and the red. They are very colorful and they are easy to understand. You can go down and you look at the advantages of using candlesticks for charting. This PDF is going to be posted in the group so you can have time to go over it. Now let's go into our chart and we see what we are talking about. If you are looking at NZDJPY, for example, this is a candle chart, okay, candlestick chart. You see, it has candles. We call all of these candles. Like we said before, look at this candle. On a buy day, we said the closing price should be above the opening price. So price opened here, traded down. Price opened here, traded down, formed a lower wick, pushed right up, formed a higher wick which is called the upper shadow, and then closed above the opening price. The size of this candle indicates that the buying pressure was so high in the market. On the other hand, if you have a sell day, price is going to open here, trade above, form the high or the upper shadow, trade below, form the low or the lower shadow. In this case, the low is very small, and then close below the opening price. We said for a buy day, price has to close above the opening price. The opening price is down here, price has to close above here. But for a sell day, price has to close below the opening price. The opening price is over here. When we closed here, this candle opened and then closed down here. Another candle opened, closed down here. This one opened, closed above here. That is how we read candles and candlesticks. And all of this is called a body. This one also is called the candle's body. This one is called a wick. This one is called the wick or the shadow. This one is called the tail. This one is called the wick or the shadow. Upper shadow, lower shadow, or tail. How do you maneuver over the different types of charts? You come here, you see this button, you press here. You are going to have all the types of charts here, but we don't use them. We pay attention mostly to the candlesticks. Now, this is the line chart. We said we have three major types of chart: the line chart, the bar chart, and the candlestick chart. This is how the line chart looks like. The advantage with the line chart is that you can see the trend, the general trend of the market. What it does is it only connects closing points from one closing point to the next, but it is not very good to use it for technical analysis. If you really want to do technical analysis, it is good that you use the candlesticks charts, okay? Now, what about the bar chart? You still come over here and you click here. It's going to open the bar chart. The bar chart is not very common, but it was used in the olden days when people started trading in the foreign exchange market before candlesticks came about. We said for the bar chart, it has to give us the open. If you look here, this is what I showed you with the candles, this information here. Remember I told you for a buy day, price has to close above the open. So the open is here, we trade below, we form the lower shadow, we trade above, form the upper shadow, and then we close here. Then for a sell day, we open here, we trade above, form the upper shadow, trade below, form the lower shadow, and then close here. So you see the open price is over here, but the closing price is below the open price for a sell day. Here, the open price is here, the closing price is over here above the open price. I hope you understand. So these are the major three types of charts in the foreign exchange market. There are other types like the step charts. It's not commonly used. The area is not commonly used. There are a lot of them. These are not commonly used, but these ones are commonly used. And like I said before, these candles represent a set of information. It's like a receipt, a transaction receipt of what has occurred in the market, of what price has done in the market over a period of time, which means these candles represent what happens in a day. For example, this candle represents what happens in a particular day. How do you know it? This is a day here. We are going to talk about time frames. So if you look here, these candles, all of these candles represent transactions that happened in a particular day. This one is a one day, all of this is one day. So it means on this particular day, the sellers were in control of the market because price opened here and closed below. Remember, we said on a sell day, price has to close below the opening price. Okay,